Welcome back to In Money. This evening we're discussing investments. My guest, Henry Biddlecombe. If you'd like to email me, you can send your inquiry to info@anchorcapital.co.za or info@bhca.co. Henry, I'm going to take silence in Bantry's Bay. He says, I've always been active in the markets, yet I'm amazed that they continue to perform despite all the uncertainty. Would you recommend using a hedge to protect the portfolio in the event of a downturn? And maybe, Henry, just to add to that, maybe you can explain what a hedge is all about.
Yeah, so I would agree. Now is an excellent time to be looking at hedges. We're certainly looking across our business for opportunities to hedge at the moment. And it really depends on the type of account that you have. Often retail investors don't have access to the toolkit that they need to hedge, but there are excellent alternatives for retail investors who can't. Things like structured products with capital protection barriers are a great alternative. If you've got a broker-dealer account where you can trade in options, a 6-month dated put on the S&P 500, it's probably running you at 3.5% in premium at the moment. It's probably not a bad thing to take out.
Henry, just explain that. So just to explain it to viewers. So you say the cost is 3.5%. Is that the amount of whatever amount you want to hedge?
Yes, exactly, of the notional value. So if you're hedging, $1,000, then it's kind of a $35 premium. And it's basically the price of insurance. Or alternatively, rather than taking out a hedge, just reduce your equity exposure. That's often a good way to do it as well.
All right, but reducing your equity exposure involves capital gains tax as well.
That's true.
And I know staying invested because of capital gains tax is not the answer, but I'm just saying I probably this particular caller, I think maybe he's done some homework, and you're saying 3.5%. So you're saying for every $1 million, it's going to cost you $35.
Yeah, in that region. We priced them up the other day, and that's the pricing that I recall.
Has that gone up, Henry?
It may have in the last week or so, but I don't think so, actually. Those things price off volatility. And if you go and look at the VIX, which is a good proxy for volatility, I think on Friday it closed at the lowest level of the year at around 13 or 14. So it's actually a good time to be looking at options.
And that means if you say you've got $1 million portfolio, you're going to pay $35,000. And that means you're going to protect the portfolio. But obviously, what are you hedging? Because your portfolio may be very different to the index you fit. Is it based on an index that you hedge?
Yeah, so you've got to match the protection against the underlying. So you must buy a put option on an index that approximates the composition of your portfolio. Otherwise, it won't be an effective hedge.
And Henry, if someone did do a hedge, would you suggest, let's assume they've got 35% in technology and 65% in a range of other stocks. Would you be saying, hedge? Are you now indicating that if the markets come down, the whole market's going to come down, not just the magnificent 7 or 10?
Yeah, look, I mean, the whole market will come down by virtue of the fact that 35% of the index sits in those 7 stocks, right? So, but what I find, Bryan, and I'm sure you do on your side as well, is most clients' portfolios approximate the S&P 500, where a big proportion, whether it's 25 or 50%, sits in those big tech stocks. So buying a put on the S&P 500 is probably an effective hedge.
Okay. Joyce in Saxonwell says, you may have mentioned this earlier in the program, and I'm just going to wait for it to come up, but which events in South Africa are likely to influence the rand?
Which events in South Africa?
Yeah, what events in South Africa? I mean, we talk about the rand, you talk about the rand against the dollar, you talk about global markets, you talk about emerging markets, you talk about inflation. I mean, over the years, our inflation differential has been a lot higher than it is now. It's pretty equal to what the inflation is in the United States. So I would imagine, what other events? I mean, is politics, the GNU, what is likely to be positive or negative in terms of events in South Africa?
Yeah, so sort of the stability of the GNU, I think, will have an influence on the rand, the strength or weakness of the rand. So you want to watch developments there carefully. Any kind of inflammatory language or discussions around extremist type economic policy, radical economic transformation type discussions can influence the rand. But what I always say is that wonderful analogy for the rand, where we really are a cork in the ocean. We've got very little ability to influence our own direction. And the currency gets bandied about by the seas of the global economy. So the real determinant of the strength or weakness of our currency is foreign capital flows.
And are we finding money coming into our bond market and our equity markets, or just one of the two?
No, we haven't seen that happen yet. And I think the market's being teed up for that. And that's why I say, just, consider looking at your emerging market or South African specific exposure. And if you are dramatically underexposed, perhaps tune that up.
Yeah, and Henry, one of the events that we're expecting in August, and the announcement is whether we come out of the listing in terms of the negative listing we've got. What are the chances of that?
Pretty good. Looks like it's going to happen. Do I think that that's going to have a massive impact on the currency? No. I think it has very positive implications for business and commerce processes. If you talk to anyone who runs a business in South Africa that has to make cross-border payments and whatever, they'll tell you it's been an absolute nightmare over the last while. So, at the margin, it's positive for the South African economy, but it's not a game changer for our market or our currency.
Okay, then Herman in Midrand says, I'm looking to generate income, and if someone hasn't invested in bonds or property before, is this a safe way to do so? I think you've answered that. Henry, would you be buying any particular property stock, or would you be buying the index?
I'd buy the index.
Yeah, because not every property stock has performed. There's a lot of those property stocks, and so you've got the bigger companies in the index making up the bulk of that.
Yes, correct.
Yeah. Then Barry in Somerset West says, when Trump announced Liberation Day, there was concern that it could shrink global GDP. We haven't heard much about this recently, and we would appreciate your perspective.
I think it's too soon to say. His tendency is to come out swinging, and then to settle on much sort of less extreme terms. That's his sort of style. But is it short-term GDP negative for the world? Yes, it is. And I suppose he's trying to counter that with a massive injection of liquidity from the Fed. That's becoming quite a political issue, even though it shouldn't be. I think he's also trying to kind of paper it over with a strong stock market. But yeah, from an economic growth perspective, it causes friction, and friction is growth negative.
Are there any things hanging around that could improve our GDP? We're talking about GDP now less than 1%. Anything positive that we can expect to actually see that in the 2020, end of 25, 26, our GDP does go up?
Yeah, it's, look, a stronger rand is probably going to relieve some pressure on the economy. It's I can't see much else having an immediate impact. Improved governance, a little bit of a revival of domestic investment. That's all positive. But at the moment, you said it, the South African consumer is strained. South African businesses are strained. Do I think global market conditions could drive a pop in our stock market? Yes. Does that help the average South African consumer? Not really. And that's an entirely separate discussion.
Henry, Musk's attempt to bring his business into South Africa and his statements that I'm not giving 30% away, is 30% into any BEE program. Is that real? Is it as simple as that, or is it a bit more complicated?
Well, in his situation, yeah, I guess it is as simple as that. It's a stance that he's taken. And our government's response seems to be, well, take it or leave it. There was an article in The Economist, was it this month or last month, talking about, what would happen if South Africa had to do away with black economic empowerment. And it's a difficult discussion, but it raises some interesting points. And has that sort of policy become a significant net economic drag on South Africa's economy? Absolutely, certainly in its current form. So, Starlink is perhaps a very high-profile example, but by far not the most serious. I mean, go back to what's happened with the mining industry. Go back to look at what's happening with the auto industry now. It's not good.
Yeah, and I would imagine with our tariff increases, AGOA's dead.
Yeah, it's a striking blow, I guess.
Yeah. Louis, I'm going to give one last email. Louis in Rondebosch says, I don't expect you to provide advice, but could you please comment to the best of your knowledge on the basics of cryptocurrencies such as Bitcoin and Ethereum? What are the potential risks and rewards of investing in digital assets? Let me make the point. Whatever we say on this, really, I know nothing about it. So you as viewers have got to do all your own research. We're not providing any advice. But Henry, any comments without giving any advice?
So, I mean, I continue to view that entire space as highly speculative in nature. What I will say is Bitcoin's resilience in the equity market sell-off in March shocked me. I would have expected Bitcoin and all of the other cryptocurrencies to fall a lot more than the market. And in fact, they behaved in the opposite way. They fell less. I was surprised by this. But I do think that if we were to see a sudden and rapid withdrawal of liquidity in global capital markets, that would be very negative for crypto assets. And they've had one heck of a run. So I would tread very carefully. And, rallies as powerful as the one that we've seen now in crypto assets tend to suck people in right at the end. And I would implore you not to fall, victim to that.
Yeah. Okay. Well, let me just close. And although the short term may be somewhat volatile, market decline should not be viewed as unusual. When such falls occur, investors have an opportunity to purchase equities at lower prices than before. But it's important to be prudent and focus on quality companies. These companies should have strong balance sheets and generate healthy cash flows. In today's environment, it's also worth considering how much they're investing in innovations such as AI. The key is to avoid buying companies solely because their share prices have fallen. Henry, thank you for joining me this evening. It's important to note that our program to provide information should not be construed as advice. Next week's program, we will be dealing, and let me just have a look at my notes, because we're dealing with estate planning, and if you want to join me, you can always contact me after the show. Henry, thank you for joining us this evening.
Pleasure, Bryan.